What is the difference between a Michigan tax sale and a tax lien sale? Have you ever wondered how tax sales work in Michigan and what sets them apart from tax lien sales? Understanding these differences can be a game changer for anyone interested in real estate investing. Let's break it down. In Michigan, we have what is known as a tax deed state. This means that when property taxes go unpaid for a certain period, usually around 3 years, the county can take action to reclaim the property. The process starts with the county sending notices to those who owe taxes. If the taxes remains unpaid, a lien is placed on the property, and eventually, it can be sold at a public auction. When you win a bid at a Michigan tax sale, you receive a tax deed. This deed transfers full ownership of the property to you right away. That means you become the new owner immediately, and the property is free of any mortgages or deeds of trust. This can be an exciting opportunity for real estate investors, as properties may be available at prices significantly lower than their market value. In some cases, you might acquire properties for just a fraction of their assessed value. Now let's look at tax lien sales. In a tax lien sale, you are not buying the property itself but rather the lien on the property. When property owners fail to pay their taxes, a legal claim is placed against their property. At a tax lien auction, investors bid to purchase these liens. By doing so, you pay the outstanding tax debt on behalf of the owner. However, you do not gain immediate ownership of the property. Instead, you have the right to collect the unpaid taxes, plus interest and penalties from the owner. If the owner does not repay within a specific redemption period, which can vary by state, you may then have the right to foreclose and take ownership of the property. The profit for investors in tax lien sales comes primarily from the interest on the unpaid taxes, rather than from acquiring the property right away. For real estate investors in Michigan, the key takeaway is that a tax sale results in immediate ownership through a tax deed, while a tax lien sale involves purchasing the right to collect taxes with potential future ownership. This distinction is essential for making informed decisions in property tax sales. Investors should also conduct thorough research on properties before bidding at tax sales. When you buy a tax deed, you take on ownership responsibilities immediately, including any issues related to the property. Starting bids at Michigan tax sales can be very low, presenting a chance to acquire properties at substantial discounts. However, it is important to be aware of the legal processes and timelines involved in tax sales and redemption periods. Understanding these differences can help you navigate the world of real estate investing more effectively.